Hey, moneymakers. So, we all know that it's been a very tough year in the investments landscape, but VM Investments Limited is actually turning the corner with a pretty stellar report for Q1 2024, and that's coming off the heels of a disappointing 2023 for the company. So, I'm Kalilah Reynolds. If you didn't know, welcome to the platform. And today I'm talking to CEO of VM Investments and VM Wealth Management, Burchenson, about the company's performance and the year ahead. Hi, Rez. It is great to see you. It's been a minute.
Hi, likewise. It's been a long time, but nice to see you as usual.
Yeah. So I know it's been a very difficult investment climate. And for you there at VMill, I think nobody was spared, really, Rez. But you have your most recent results out. So tell us what you have to report right now. What are the highlights?
Okay, lovely. So let me just backtrack about a bit to 2023 and also 2022. We've seen a very challenging space in the investment markets. Those of us who operate in this environment would have had a difficult last 2 years. I would say, though, that one of the things that we're seeing from our Q1 numbers is the realization of some of our gains from our P portfolio. We did, dispose of one of our larger holdings in our P portfolio, Carin, and realize some gains there. Overall,
What's the P portfolio? What's that
private equity.
Private equity. Okay.
Generally, the investment market still a bit tough. What we're seeing is compression of spreads for net interest income for some of our other business lines, such as our capital markets business. Again, very challenging space. Nonetheless, we are very appreciative that and encouraged that our asset management business continues to do very well, very resilient business line with growth over the previous year. And also, because we are, an investment management company, so to speak, we allocate capital, where we see the highest returns. We're also taking some positions that will bring value down the road for the business. So very interesting space. Encouraged by first quarter performance coming off a very tough 2023. But we're looking forward to 2024 with cautious optimism.
All right. So you mentioned a couple of things there that I want to follow up on. I know your annual report came out early in the month, around the 6th, I believe. And then you also had your quarterly report for the first quarter. So coming off the annual report, going into the quarterly report, what improvements are you seeing specifically? Because the annual report, there is something to be desired given the context of the current investment climate, of course.
Yeah, agreed. So if you were to look at the financial performance for the companies in my sector, what you're seeing is, across the board impact generally. And that's to be expected in my business. Our business, we thrive off a growing economy. We thrive off, low interest rates. We thrive off transactions, more transactions being done, whether it be on the equity side, on the debt side. So if there is a pullback in the overall economy for those transactions, those certainly those will negatively impact our space. The difference that you're seeing between 2023 and 2024 is, and we have spoken about it for the past 2 years, is we did say that we really want to play more in the private equity space. And so we're seeing some realization of some of those gains from some of the positions that we have taken for the past couple of years.
So what are you doing differently? Because you offloaded Carin, which was a big part of your private equity portfolio. And you're saying now that you want to play more in the private equity space. So what are you doing differently?
As PE managers, what we do, we take positions, we help the business to grow. And then at some point in time, we take a decision to realize value, whether it be to a institution, whether it be to list on the JSE or a strategic investor. And that's a typical mandate of PE firms globally. The 2023 vis-a-vis 2024 is that you'd have seen that we have closed an acquisition in Barbados. That's a key market for us going for the future. Asset management is going to be a very important pillar for VMIL, and so we envision and we're putting lots of effort to grow that space. It's gonna be a medium to long term play for us. Smaller market, but certainly the economics work. Much higher GDP per capita, etc. So we're putting some effort into growing out that market. That's gonna be the first as we seek to identify other opportunities that may arise in the Southern Caribbean.
Why did you offload Carin at this time?
Simply, we have some other opportunities that we felt the rate of return on those investments were certainly higher than the return that would have gotten from Carin going forward. So we took a strategic position to dispose of Carin at this point in time. Still a great company, still going gangbusters in Barbados and in Trinidad, building out Jamaica. But there are lots of opportunities in the space, whether it be VCs or startup, that space we don't play in. But we're seeing quite a bit of opportunities in the private equity space in Kingston.
In Kingston? Interesting.
No, Kingston, I mean Jamaica. Kingston, I mean Jamaica, generally.
Oh, okay. Okay, because you're mentioning Barbados before. So who's your star? I won't ask you about who you're looking to acquire because I know how those negotiations go. But who's your star now?
Star in terms of business line?
Yeah.
Well, all my business leaders are stars, right? Because they work at VMIL, right? Would you agree?
True.
So we have 4 business lines. What I'm proud of is that we really have a diversified business. First of all, we have a line we call opportunities that may come from time to time. We have capital to deploy. There's some income to be derived. Secondly, I'm talking about wealth management subsidiary now, right? Lots of opportunities on the opportunistic front. Those transactions take place in VMIL, directly. In our wealth management business, our asset management portfolio is very resilient, been growing, a lot less susceptible to economic conditions. I mean, most of those investors really want an exposure to assets through a manager, and they are taking the long view. Those investors do range from pension funds, institutional investors, but also lots of retail investors who have said, I understand the need to invest through a unit trust portfolio. Here, I can make consistent investments in a portfolio. That portfolio is managed by a professional, and they're thinking the long term. So a very resilient business there. Within asset management, we have private portfolio management, mainly for, let's say, an individual of a higher net income. Those persons would give us a couple dollars. Well, we manage those portfolios on their behalf. So that's a resilient asset management business right there, which certainly is a key pillar for us as we kind of build this business forward. The next is trading. This is where we're trading bonds all across the globe to clients in North America, South America, the Caribbean, in Jamaica. That business, as you can imagine, very susceptible to economic conditions, global economic conditions, etc. Then we have our capital markets business. Again, a business that is growing. There is certainly, that's where the innovation takes place. So what you'll have a typical institution who would have perhaps gotten bank financing in the past, but certainly is seeking a bit more creativity in their financing needs for various reasons. Some of those persons are looking for debt structures or equity structures or a mix of both, but based on where they would like to go, certainly require more than just a cookie cutter approach. That is where our capital markets business comes in. But again, a business that, even though we're making lots of inroads, is dependent on the economic conditions. Our treasury business, bread and butter of this business for quite a number of years. In this market, you will have compression of spreads, but a business that, if managed well, can generate really great returns for the business. So that's how we kind of see the group. You have the broker dealer, but then you have a V-mill balance sheet that we're leveraging for opportunities all across the Caribbean, all across Jamaica. That is where we do our P investments from.
Is there anything that you're excited about right now?
Well, what I would say is that, so I've seen these cycles in my past. What you'll see in these cycles, there'll be 2 or 3 years of a very challenging space for various reasons, whether it be a fiscal condition or or monetary policy. We've seen it. I've said it before on various programs. Our economy has survived the challenge of the 70s, structural adjustments of the 80s, Hurricane Gilbert, debt exchanges, the financial sector crisis, and we're still here. COVID, and we're still here.
Don't forget COVID.
We're still here very strong, right? Very strong. So I believe that when I look at where Jamaica is based on the macro numbers, when I look at how the Fed is posturing in terms of some of the global central banks, how they're posturing, we are cautiously optimistic that we'll see a rate reduction this year into next year. Then you're going to see more transactions coming back to the space. You're also going to see, instead of the compression in spreads, spread expansion, and also the local business community. A lot more entrepreneurs coming to the space. Lots of these guys have access to loads of capital, and I believe that Jamaica is well positioned based on where we are. And I believe that companies such as V-Mill and others in the financial sector space will do well going forward next 2 to 3 years.
Mm-hmm. Let's take a closer look at the 2023 annual report, because I want you to explain some of these numbers, explain what we're seeing right now. So I'm looking at the 2023 report and I see your income statement, which is where my eye typically goes first. I'm looking at the consolidated revenues falling from 2.3, I'm guessing this is with a triple zero at the end, 2.3 billion to 1.9 billion thereabouts, and your net profit falling even more significantly than that, from 716 million to less than 200 million. So explain those, and then I want to talk about expenses going up as well. But why was revenue and profit down so much?
So it's very important to look at the income statement based on the conversation or what I just said before regarding the 4 business lines. So there are business lines that were challenged based on last year. That's the overall market. So what you've had was a reduction in revenues from those business lines. That's the first thing on the revenue side. Secondly, on the cost side, you've seen cost increases across the board. We know we're operating in an environment of high inflation, and that's the first thing. Second, there's the cost of technology improvements. That's the second one. Thirdly, one of the key pillars of this business is talent acquisition, development, and retention. We're in a business that's a talent-driven business, and we have to ensure that we keep pace with the demands to attract, retain, and develop that talent. So with the reduction in revenue for 2023, some cost increase across the board, some based on the vagaries of the market, some that we had to do for strategic reasons. You are seeing a compression in the net PAT. Net PAT fell from, I think, 718 down to 198. So again, very tough year. I must be very honest about the challenge of 2023. But when we look back at our strategy, notwithstanding, and it's a very important point to make, that notwithstanding the challenge of last year, we believe that going forward, that we are building a much more resilient business.
I find it interesting that you mentioned talent because with all the talk about shortages in the labor market, the conversation generally has been on like manual labor, construction. People can't find workers for tourism and those kind of jobs. But when you look at the intellectual jobs, I hear there's a shortage of accountants and auditors. And then in your industry, it's hard to find talent too, Rez?
No, there is a shortage of talent across the board, all sectors. But let me speak for my sector, but certainly we're impacted. So just understand, right? I mean, I believe that I don't have the exact number in front of me, but the last time I checked, around 70% of our high school and university graduates leave Jamaica. I mean, that's a massive impact. Massive impact. If you ask me, they're going to North America, they're going to the UK, they're going to Canada. So what to retain, to attract, develop, and retain the talent that's localized, obviously lots of pressure in the space. Lots of pressure in the space.
Wow. Yeah, you know, I feel it in my industry too, even in media. Finding good talent is not easy. I need to travel soon, and just finding somebody to fill in for me for one evening is a challenge. The skill set, man, it is so hard to come across. And then you have to invest so much to develop the skill set as well and to develop the talent.
One question. The development is also very costly. For time, resources, courses, all of those things. So, you know, when in a space where the top line isn't going as much, but you're forced to make those investments because it's a talent business just like yours, then you're going to have a compression in spreads. But as I said before, you know, our view, I mean, I'm certain you have lived through these cycles, Kalilah. There are cycles where the economy will do well, firms in a particular sector will do well, but there are going to be instances where there's going to be a challenge for whatever reason, which is why we have such, you know, high regulatory standards in Jamaica. And I certainly boast about, you know, how our ratios stack up vis-a-vis the regulatory ratios. But that's how the markets are. Our job as leaders of this business is to make the business more and more and more resilient. We saw the impact last year, not something that we're proud of, far from, which is why there's a deeper thrust, and I've said it before in other circles. There's lots of deeper investments around the areas of the business that are more resilient, and I speak about asset management, but also the role that tech and digital will play in driving this business forward. So, for example, last year, for the past couple of years, we made quite a bit of investments on the digital side. And let me give you two. We now have an IPO platform. That IPO platform can do IPO, rights issues, APU, and preference shares. And if you look back in 5 years ago, whenever an IPO came out, that was just chaos in the market. No, there's a system that VM Wealth and other brokers would have leveraged to drive that efficiency. That's the first thing. The second thing is that you can't drive a business forward without listening to the demands of the customers and the type of customers that are going to be the future of your business. The future of our business, the clients are much more digital savvy. Some of these clients don't necessarily want to be served by, certainly want the ability to do transactions without calling a human being. So we're actually doing lots of investment to build out our client management portal. We've done a number of releases, giving person some of the basics, what I call price of admission. Your statements, your transaction history, to track your goals, sending requests, all of these things. But that platform has to do more going into the future. That platform, going forward, certainly have to get advice from that platform, whether it be from AI or robo advisors. That's a vision that we have for down the road. But it's simply making the process for a client as seamless as possible for when they're executing their transactions. Are we there yet? No, we're not there yet. So it's a vision we have for the future. We're building on the platform, but the intention is to ensure that we certainly address the demands of our current customers and our future customers.
So let's zoom in on the Q1 2024 because we already looked at annual report 2023. We acknowledge what happened there. But then Q1 2024, I'm seeing that consolidated revenues doubled and then net profit went up by 2,400%. How did you pull that off? What happened there?
One of the things that we're trying to do is to build a business where the gains aren't as lumpy. And I must confess that there are some lumpy gains in the Q1 number. The gain on sale of Carin is just one. As we build out our private equity platform, because private equity, let me kind of step back, is simply, giving a growing business capital today, help them to grow their business, and one day, in the medium term, exit with a gain on your initial investment. So what we're seeing is that investment was made in Kalilah some years ago, and we have realized those gains in the Q1 2024. Will that be replicated in Q2, 3, and 4? No, we don't expect so. The gain that we have made, we have redeployed in other, or plan to redeploy in other opportunities. Those opportunities are unlikely to present a material gain of the quantum of the Caroline gain in 2024. But that investment will make gains in 2025, 6, 7, 8, 9, and 10. So that's how we kind of run the business. We cycle the capital based on maximizing those returns to the benefit of our shareholders. So there's some lumpiness in the business model at the moment.
I see.
I did speak to building a more resilient business, building a more predictable business. That then is predicated on growing our asset management platform. Our asset management platform, number of pillars, our unit trust portfolio. In Jamaica, we have 9 portfolios, award-winning, market-leading. We have our asset management business in Barbados. We have 3 portfolios in Barbados, and we do have a private wealth management business in wealth management for a particular type of client. So, what are the opportunities that we're seeing in that space to kind of go the business forward?
So we shouldn't get too excited then that this indicates a rebound in the industry.
No, I wouldn't say that just yet. I mean, we're seeing more transactions in 2024 vis-a-vis 2023, and I'm speaking about the broker deal at the moment. But I wouldn't say that we're at a point where we're seeing a massive rebound. I think from where I sit, I'm cautiously optimistic about much more transactions emanating from the space, but I would say in the second half of the year, perhaps in end of Q3 towards Q4, and the market certainly will take its cue from what's happening internationally with the Fed, what's happening locally, etc. There are also some geopolitical considerations that we all have to look at. We have elections in the UK on July 4th, so it's a very exciting market. But it's a market that we need to pay attention to.
Yeah. Locally, though, we're seeing, I would say, I don't know, it's kind of early to say a resurgence of the IPO market. Omni was oversubscribed. That was a fairly small one. NCB did their APO. They did not meet their target. But we have heard that we have other IPOs lined up for the year. Do you guys have any, Rez, coming up this year that you expect to be out this year?
Always have IPOs in our pipeline, always.
Well, what's your take on the current investment climate? When I say investment, I mean specifically stock market climate, and we can talk as well about the bond climate because we know what interest rates have done there too.
Let me step back. I don't want to address IPOs just yet, if you allow me. So one of the things I encourage investors to do is to look across the entire stock market landscape. There is a view that you only make gains in IPOs. And I can understand the narrative because what we've seen in the past is that some of the smaller IPOs, they get oversubscribed, they list, and over the short term, there are some gains to be had. Kudos there. Job well done by the respective members of the community. That's the first thing. However, we do have to look back at the companies that are listed on the JC, right? Whether it be the junior market or the main market. And I would submit to you that some of these well-run companies, strong financial statements, strong balance sheet, really making inroads, that some of these companies are trading below. I don't want to complicate the narrative, but what we call intrinsic value. And I do encourage investors to take a look at these investments. Oftentimes, we only look at stocks when the market is booming. If you read the literature, if you talk to any other brokers, if you read books about stock market investing, the best time to buy stocks is when nobody's buying stocks. I would say to you that if you were to start to accumulate a portfolio of stocks during 2024 and hold those for the medium term, I think that you're going to be rewarded handsomely. And that has been how markets work, year in, whether it be Jamaican market or international markets. So I do encourage persons to take a look at some of the companies that are listed. We have high dividends, growing dividends, strong balance sheet, net PAT growing. So I encourage investors, take a look at them. Take a look at the P ratios now vis-a-vis the price earnings ratio some years ago, the P ratios now vis-a-vis their peers. Read the quarterly statement, attend the AGMs. You will hear of companies that are really making inroads, and you really don't want to overlook those companies waiting only for IPOs. Because if you wait on an IPO, let's say there are 5 IPOs. If they're oversubscribed, it may be allocated 20% of what you want, but the opportunities are right in front of us that we need to really look at.
What is your take on the current interest rate environment?
As in, it's going to rise, it's going to fall, it's going to be stable?
Well, right now, interest rates are high. There's a lot of talk about the BOJ should reduce interest rates, but they're waiting on the Fed. Bond prices, therefore, have been high, so people are getting some handsome returns on those. What is your thought on that whole climate right now?
Okay, I do understand the need for the higher interest rate environment locally. And the reason for same, we talk about capital flight or current account deficit. And that's why I have monetary policy, and I do believe the central bank would have been very proactive. They were certainly one of the first out the door to protect the gains that would have made historically, right? So kudos there. However, Jamaica is one country in a global economy, right? And I do believe that lots of central banks across the globe are looking to the central banks of the more developed markets. We've seen some moves last week. Persons are looking at the Fed for important reasons. The world reserve currency, major trading partner. It's one of the places where if there's capital flight, person move the money to North America, etc. However, markets operate in cycles. Interest rates rise, interest rates fall. I believe that the numbers that we're seeing cautiously optimistic for rate reduction later this year into next year. And again, even though we're asking for rate reduction, we do have to understand that we will have to protect the gains that we have made. Because oftentimes in our not too distant past, we've made gains, and for various reasons, those gains were eroded. So I think I would take a balanced view. But having said that, though, I do believe that the investments market would welcome a reduction in rates when that reduction does come through.
Is it time?
Is it time? I would say the sooner the better. The financial sector has gone through a tough last 2 years, very tough last 2 years. And perhaps I'm being selfish in saying would welcome it sooner rather than later. But again, I'm being selfish from where I sit but to understand the overall investment policy of the monetary authorities.
You know, Rez, it's always so good talking to you. The time flies. I didn't even realize that we've been talking for so long already, and I haven't even asked you about Republic funds in Barbados yet. I think you might have mentioned it earlier, but VMIL has completed 100% acquisition of Republic Funds Barbados. What do they do? Is it an investment firm as well?
Okay, so simply put, Republic Funds is let's call it the manager of 3 mutual funds in Barbados. One in the bond space, one in the equity space, one in the real estate space. So for example, anybody who wants an exposure to Barbados bonds, Barbados equities, Barbados real estate, is encouraged to invest in those portfolios. So that's in essence what we do. That portfolio, and that's why we're attracted to that portfolio or that purchase, because it aligns to our thrust to grow asset management business across the Caribbean. That business, though, we have lofty goals for that business. I think right now, and I've said it in the past, we want to ensure that we do the integration well. We want to understand the market. We want to understand the needs of the customers. We want to ensure that we can serve them well, however they need to be served. And while we're doing that, or after we've ascertained that, then we want to then see how we can accelerate the business in Barbados and replicate that model throughout the Southern Caribbean. So there is, I think we're having acquired the business, there is some investments to be made, and we've been very patient. And then I believe that shareholders will be rewarded in the medium term. So let me step back a second. When we made the investment in Carin, there was a time when shareholders were asking, well, when are we going to see the returns from Carin? There were many questions asked, perhaps even on this program or on, attending the AGM. And now I can proudly say that, here it is, we made an investment. We've made some gains. The Carin investment has been amazing. The Carin team has been an awesome team. They have created value for their shareholders, and we know that they'll create more value for their shareholders going forward. But we have decided to redeploy some of those money to some opportunities that we want to support locally.
Mm-hmm. And then looking locally as well on the Jamaica landscape, I see the VM Wealth Classic portfolio was the top performing real estate unit trust portfolio in Jamaica in 2021. But there seems to be a slowdown in construction now. What is the real estate sector looking like right now? Rez, is that still hot?
Let me first talk about our real estate portfolio. So our real estate portfolio, there are various segments in the real estate market. You have warehouses, you have residential, you have luxury, you have hotels, various sectors. We have decided to play in the commercial space. In the commercial space, I believe we manage close to 300,000, maybe about 400,000 square foot of real estate or square feet of real estate across the entire Jamaica. We have decided to play in that space because we understand that space. You put up a building, you get a tenancy, you service those clients very well. And what you're driving a lift in the rental rate primarily, and that lift in the rental rate drives valuation. What we've seen for the past couple of years is that the commercial side of the real estate market certainly was underserved. No new developments in that space.
I remember having that conversation with you. I remember we spoke at length about commercial and I think industrial as well.
Correct. So only in the last 2 years we're seeing persons coming into the commercial space, right? So because there was underinvestment in that space, it drove up rental rates. Persons are coming to the space, so obviously we have to pivot. So there was some work that we need to do in managing a real estate portfolio to keep pace with the newer developments, and we understand that. And certainly are running the business to minimize some of those risks in our real estate holdings, right? So we do believe, however, that there's, based on where we're positioned, there's still lots of upside in that space. We have to think creatively. That's the first thing. Secondly, to answer your question, is that in the real estate market, I am not the best person to answer the question. I believe that there's some softening, but softening isn't a bad thing. And I don't know, sometimes we get, hung up on a market softening. A market softening isn't necessarily a bad thing. Give person time to assess. We look at their investment or the investment portfolio, decide what's the next move. For persons who always wanted to enter, obviously they have some time to decide what's happening. So for example, you're seeing that softening on the equity side for the past 2 years. So new investors can sit back, stocks aren't running away, and decide, hey, how do I start to build a portfolio of stocks for the medium term? Real estate market softening, same position. How do you assess, decide which sector or sectors or segments are best placed to drive growth for the medium term? So will the Jamaica real estate market do well going forward? I do believe so. Are there some headwinds? Yes. Are there pockets of value? Lots of pockets of value still available in the local market. One is the low end side of the market. I mean, not even my statistics. Everybody says it. Market where you have 30,000 demand, and that demand is filled 30% each year. So there's some pockets of value out there to be exploited.
And of course, we can always consult you guys at VM Investments to learn more.
Well, the VM group, we are the property experts. We're the real estate experts in Jamaica. We do mortgages, we do valuation, we do sales. VM Wealth does manage a portfolio. And then remember that we also own a small stake in Kingston Properties, which is going gangbusters based on their diversification efforts. VMill owns a little below 25% in Kingston Properties.
Awesome stuff. It's always great chatting with you, Rez. Thank you so much.
Thank you, Kalilah. Have a great rest of the day.
All right. So what was that interview like for you? Let me know in the comments. What were your top highlights from Rez? Leave a comment below and let us know what your thoughts are. Of course, remember, guys, to like the video, subscribe to the channel, and share with a friend. What were your top insights? Of course, follow the channel and subscribe to my other platforms. Visit the websites as well at KalilahReynolds.com. There you will find a summary of this video. Until then, let's get this money.
Let's get this money.